Do you remember what two major categories of assets a balance sheet shows? If you guess current and non-current assets, then you, my friend, are exactly correct. Well, guess what? I'm going to make your day a little bit easier by telling you that the balance sheet shows two major categories of liabilities as well. You won't be surprised to hear that they are also referred to as current and non-current liabilities. A company's current liabilities are those obligations that will come due within 1 year. They're also known as short-term liabilities and include things like accounts payable. Let's hear from an expert as they explain more about current liabilities.
Current liability is borrowing money that you intend to pay back pretty quickly. So in the scenario, we need a pressure washer and don't quite have enough cash in the bank to make that happen. So what do? You go to a bank, or maybe you got a friend, I don't know, but you go to a bank and get a loan. And it's usually a current liability is something that's going to be paid off within a year. So a pressure washer wouldn't be too expensive, probably something you can make payments on that short-term loan pretty quick and maybe get it paid off within the year. But that is usually what a current liability is used for. We don't want to hang on and have a long mortgage. This is just something we're just going to, didn't have quite enough cash for, and we're just going to pay it off as fast as possible. So some current liabilities could be in different forms. Some banks offer lines of credit, which is basically they were approved for a $10,000 line of credit. When they want to buy the pressure washer for $8,000, they can pull from that line of credit and buy the pressure washer. Obviously, they have to pay that credit line down and hopefully off pretty quick. Might have a higher interest rate because it is a short-term liability. So you want to get it paid off pretty quick. Other short-term liabilities or current liabilities, that's two ways of saying it, is a credit card. Think of it, I have a credit card that has a $10,000 credit limit. Well, maybe I can put the pressure washer on that and pay it off as fast as possible because, as we all know, credit card interest can get a little pricey. So that would be another form. Sometimes even owners of companies or people who are principals in the company might loan the company money temporarily during a cash shortage. That could be another version of a short-term or current liability.